Okay, traders, today is Thursday. It is March 10th, 2011, and we are looking at the U.S. dollar index, the June contract. We have just rolled over from March to June as of this day. And as you can see, we've had a little bit of a rally here, traders, and we've gotten above, which is very interesting, we've gotten above a parallel channel. Will that hold is another story. There are news reports coming across right now that there's been some shootings in Saudi Arabia. If that's true, I think the dollar will get some flight to quality because that's a serious problem if Saudi Arabia is going to somehow have trouble with oil. So I think what we're looking at here is the possibility of traders out there thinking, oh boy, if it gets ugly, maybe it's time to get long some dollars. So that's likely what we're seeing. What I will say is we have not seen a flight to quality take place since the unrest began in the Middle East. There's been no flight to quality in the dollar. So the dollar's looking interesting here, but I think we have some other markets to tackle, and that's what we're going to do now. Let's go look at the June ES, and we'll do a full circle. We'll come back to currencies. The June E-mini S&P. Traders, bull or bear flag, you make the call. We are still steeped in that indecision area. Is that a bear flag or is that a bull flag? From what I can see, that is a bear flag breaking down. There is an argument for the bull flag. The argument is that little blue bull flag I have drawn in there. The thing with this bull flag is you'd really have to take it all the way down to here to make it right. But what I dislike about it is the bottom of the bull flag is only touching one bar. Is that really a bull flag, traders? The only way we'll know is if we come down, hit this and hold it, and then it rallies. That would make the bottom of the flag valid. Because if then we have 2 points that the bottom of the flag will connect to. But we don't have that right now, traders. We have a bear flag breaking down, and we have a lot of traders drawing in the bull flag saying this is what it really is. And in all honesty, there's no way to tell right now. I will say this. Fundamentals always come out in the charts first, and last week we seen a round of bear flags around the world in indices, all over the U.S. indices. We found them in grains. We found them in currencies. Bear flags everywhere. That is almost always an omen or a prelude for big news to come out. Now, what big news has been coming out lately? Crude oil, as we know. Crude could very well put some damage to our market rally. I don't think it can stop the big bull overall, but I think it can do some damage to our markets, and that's the fear. Now, if you look at the parallel channel, we just broke out of it. We just came out of the channel. Look right here at this bar. So we're out of the parallel channel, and we're down below the bear flag. We are testing what could be a poorly constructed bull flag after we come down a little further. But I don't know. Once we do a look at a few more charts, I don't know that that's a bull flag at all. Let me explain. Let's look at the Russell. And remember, we're in June contracts now, no longer March. In the Russell, that is a better picture of a bull flag. I will admit, I like that picture better. So in the Russell, you're breaking down out of bear flag, and you must contend with that bear flag now. There's nothing you can do but deal with the bear flag because that's what we're breaking out of. Will this become a bull flag? We will find out shortly. The interesting thing about the Russell is the bull flag and the OMNI average are about to come meet one another in the next day or two right below the market. Encouraging. I like what I see right there. So you have the bull flag in the Russell, that's an absolute argument, and you have the bear flag, which is a bear flag, has broken down, and is showing us that bear flags make markets go lower. So unequivocally, we're coming out of a bear flag, but we do have a decent look of what could be a bull flag. But we're not done looking at all the indices. Here's where it starts to get tricky. Now we look at the transportation average. This is the leader of U.S. indices. When you look at the transportation average, traders, there's no real argument right now for a bull flag unless you try to draw a tremendous bull flag. encompassing almost this whole area right here. But I don't know that that's what we're looking at right now. I think that's a bit of a stretch of the imagination. What we are looking at is a bear flag. We are still inside of the bear flag, and the OMNI average is near the bottom of it. And we have not taken out this flag yet. It hasn't happened. So, indecision, absolutely. Do we have bull or bear flags? We're uncertain. The leader does not have a bull flag in it unless we drop several hundred more points, and we can construct a bull flag out of this big mess right here. Now, it is not a bull flag. It is certainly a bear flag, and we are inside of that bear flag testing levels. So that's the leader out of the U.S. Now we're going to take a look at a leader, and this has become much bigger of a leader lately than it's ever been before because it owns the New York Stock Exchange, and there's a lot of attention being paid to the DAX now. So the German DAX, absolutely a leader out of Europe that many will pay attention to. What is that right there? We broke out of the bear flag, and we have a big bull flag constructing. But is that really the big bull flag? First of all, it makes more sense down here, and I'll show you what I mean. It makes more sense down here, but then you have nothing else to connect that flag to. The top connects to 3 spots. You love it. Right here, right here, right here. The bottom only connects in 1 spot unless you pull it a little higher, and then you can connect this stuff here. Then you have a connection here, and one here, and possibly one here as of today. Depends on how low the DAX goes today into tonight. So we have the leader telling us it's possibly a bull flag, but certainly you just broke out of a bear flag, and you cannot argue that point. Then as we move around Europe, we go to the FTSE. On the FTSE, traders, there is zero argument for a bull flag. There is no argument here for a bull flag. I can't find one. I can't construct one. I don't see one. I can falsify one if you want me to do something like this and say, ooh, big flag right here. And I can force that in if you want me to, but I don't know that that's what we're looking at right now. I just don't think that that's what we're looking at. So what we are looking at as day traders is what we see, and what we see is the bear flag that is just broken down, and we are now down below OTAPMA, or the Omni Trading Academy's proprietary moving average. I am not comfortable with what I'm witnessing. So the indecision is getting worse by the moment because there are other markets now that are not participating in building bull flags, but they are certainly beginning to break down from their bear flags. Okay, traders, so the FTSE, as you can see, broke down out of that flag. Let's go look at another chart now. Let's go look at the 11-day cycle that I showed you in our last YouTube video and see what happened. Okay, traders. Here we are, the 11-day cycle, and this is what I showed you in a YouTube video. This is the E-mini S&P, the June daily bar continuous chart. What you'll recognize is I had this rectangle here, the red rectangle, in our last video, and I said, look what's interesting. Right here, the averages are really far apart. In fact, let me make that yellow so it just jumps out at you. The averages are really far apart right here. And they stay apart, but then they suddenly come right together very quickly in 10 days, and you can count them. Right across here is 10 days. On the 11th day, a blowout takes place. The averages all come together very smartly right here, and a blowout takes place on day 11. So I noticed that same exact look right here, and I say, whoa, look, the averages are far apart, and they all come together for no reason. Let me count the days, and I go across. And I realized there's exactly 10 days, and on the 11th day, something should happen. What happens? The averages all come together. What else is interesting is during those 11 days, you might note if you look at the blue average, that little wiggle sort of looks like if you draw a bird up in the sky, or one-line bird right there, that wiggle. So you had the wiggle, you had a 10-day consolidation, and then all the averages converge right here. And on day 11, the blowout takes place. Well, this time, we had the exact same 10 days. We had the exact same separation of those averages, which they all came together here. And you had that little bird-looking dip, but this time day 11 broke to the downside, and that, my friends, makes the bear flag scenario valid. Now we have a bear flag that we've broken down from on the 11th day of that 11-day cycle. So it worked. It just didn't blow out to the upside. But you may recognize we took a neutral approach today. We did not sell or buy the market because we didn't know which way it would eventually break out. And here it is. It broke out to the downside, giving us at least one more down day. And I say that because look what happened after day 11 on the upside breakout. You had day 11. Day 12 was another big up day. Well, you have day 11 here, and day 12 is likely going to be another big down day because you just broke out of the bear flag. So that's our 11-day cycle, traders. I hope that's helping you. Let's go look at another chart. When you look at the ES like that, the first thing that comes to anyone's mind should be bear flag. You should not see anything else when you pull up that chart but this. It's the first thing that should come to your mind. Is, ooh, bear flag. I mean, that's what your eyes should catch. Now, of course, we all know that the argument for the opposite side of that is that this is a flagpole and that this thing is going to be a bull flag. And boy, oh boy, would I love to see that. And that's likely, I hope that will be our event. It turns out to be the bull flag. But I got to say, traders, for now, I'm removing that and I'm saying that we're coming out of a bear flag and we'll see what its projection is. When it's finished with its projection, we'll take another look, and then we'll see what type of flag it morphed into. The other thing that's disturbing is it's a beautiful parallel channel that we just broke out of. Don't like to see that even slightly. And if you pull up the DAX, when you look at this, what comes to mind, traders? Answer the question. Look at the chart. First glance, what comes to mind? What do you see on that chart? Head and shoulders. Very good, Greg. That's what I see. The moment I pull that chart up, I go, ooh, that's a big head and shoulders starting to construct there. What else is in that chart? Well, the infamous bear flag that we just broke down from. And this is ugly, of course. It's not a perfect flag, but you got to find the spot to define what you're in. So somewhere in here, you can just drop your line, and we just broke out of a bear flag. I don't like what's going on here. I have to tell you, I just don't like what we're seeing. I really hope some support comes in, but this is a big drop out of that bear flag. And if we challenge this area right here and take it out, we have a big problem in the DAX. Big. That would mean a top has just been put in. So that's what we're looking at in our indices. Let's go look at the euro currency. And let's switch to another chart. Look what the June euro just did. I don't know that I want to be short any longer that market. It had a couple of nice down days, 1, 2, and then it put in this third one. If you settle for 3 days, count them, 1, 2, 3, and I'll draw them in. You need 3 days settlement below this line before its back is broken. 3 days, not 1, not 2. After day 3, you consider its back broken. Until then, you look at this as nothing more than a great dip in a good bull market. What Greg is saying is, Greg in the premium room is saying that it could be a head and shoulders constructing. Once again, absolutely, traders. That's what the big problem we're starting to see here is they're all over the map. I don't like to see that. What could be constructing next is shoulder on the right. Now, take this out to a weekly, and boy, oh boy, it's exactly what you have. Let's take euro out to a weekly. When you look at the weekly in euro, you have a head and shoulders with a possible head test beginning right here. So when I'm talking about indecision in the markets, boy, oh boy, is there a lot of indecision taking place right now. We're at levels where markets should find support and turn around and rally. We're at levels where markets should find resistance and turn around and drop. But we're steeped into those levels right now in many different markets. So it's a very interesting spot that we're at in the marketplace. Of course, these things go away very quickly. That's what I love about being a day trader, because within 2 days, everything can clean up. The bear flag could show itself. The bull flag maybe will show itself. Something will show itself, and away we can go. All right, so then I started this off with the dollar index, if you recall. The dollar index clearly broke above that channel, and what's interesting is flick back now to the euro. Dollar, you see clearly, is above the channel, right? No question there. Euro, different. There's no real answer for us yet, traders. That is basically why I went neutral today. Whether the markets went up, down, or indifferent, I took a neutral stance so I could see what comes next. and prepare myself for tonight's action. But look at this. You held very smartly so far today on your euro. Euro holds the line. Dollar index doesn't. As you see, dollar did not respect that line. Now, I can pull it out a little bit, this line, if you want, just to get a little bit higher, but it still took it out. Still. Even if I exaggerate the line a little bit, we took it out. So on the opposite side of this is if you get 3 settlements now above this line, which today could be 1. If you're looking at today, we are above the line at this point in time. And if it settled right here, you got settlement 1 above the line. 2 more of those, and you have a breakout coming. At least something that you should consider a breakout coming. Now, what I find slightly interesting about this dollar move is it didn't start down here like this one. It started all the way up here. It's starting right here. May have more upside to go before it runs out of steam. So there, traders, is nothing but indecision in our markets. It's what I seen last night, and it made me take a neutral stance. And of course, we look at the June bonds. June bonds right back to the OMNI average again, the same thing that stopped it cold last time around. There's a difference this time. You get above this, Saudi Arabia shooting protesters, that's the news coming in right now, and if the dollar starts to rally, bonds are going to end up in a flight to quality and end up here somewhere. So traders who are long-term short bonds, you may have an opportunity to do 2 things. 1, take some profit and sell it higher. Or 2, you will have an opportunity to add to your short positions as we rally. As we know, long-term, we're bearish in bonds. If you pull up the March chart, you'll see that you have to be. I'm showing you March because June is most active and the chart is smaller. March has more days. Let's look at the March. When you look at the March contract, it's come down quite a bit, and it just keeps failing at the OMNI resistance each time it gets there. However, we're not blind. We do see that the problem now has gotten into Saudi Arabia, and that makes a difference to bond traders. Short term to slightly intermediate term. In other words, the next few days to the next few weeks are going to be very difficult in bonds if, in fact, there's more unrest in Saudi Arabia. Knowing that Saudi Arabia would be able to make enough, knowing that Saudi Arabia has enough capacity to turn up their spigots and basically take care of the problem in the Middle East for us, that kept everyone happy. You know, kept everybody looking at the market as it's not going to break. But we have protesters being shot in this market right here. When they started to announce protesters being shot, we were down here, traders. We rallied all the way up to here so far since that news came out, and it hasn't been out for 20 minutes. That's what the crude gave us. The moment there was news, now undoubtedly the crude will go much, much higher if unrest in Saudi Arabia unravels a little bit. I don't know that that will happen. None of us do. But I do know this crude is going to spank the ES for a few days, maybe even slightly longer, but it'll come back. And I will try to explain why. Here's your crude now. Fell out of a nice parallel channel. I think that's meaningless at this point because the fundamentals are just too strong. You have the whole street staring at every tick in crude and selling S&P versus the buy ticks in crude. So you can't really look at this technically and say, ooh, we're being saved. But we can do something that's interesting. Take a look at something else. Okay, we are looking at the cash S&P right now. And I want to take you back on a little journey. This was our high of 1577. This was our low of 666. Right here, you are looking at them both. The high and the low that we have seen since the big crash began. This was our highest high all the way down to here. Now, when this happened, remember, you had crude doing exactly what it's doing now. But you had a crashing derivatives market coupled with a crashing real estate market and crude skyrocketing. And I will add that in now. This way it's visual for you. And crude skyrocketing. This was our scenario when the S&P couldn't take it anymore. The scenario that we have right now is different. And the reason why is that this is not happening and this is not happening. All we have is a skyrocketing crude market. That's a difference, traders. We can sustain a skyrocketing crude market if that's the only thing they throw at us. We will get jolts, undoubtedly. We will absolutely have our jolts. This was one of the jolts that came from crude breaking above 110, this move right here. Because crude got above 100 and we dumped to about here. Then we rallied smartly all the way up to here and crude got above 110, 115, and this is what came next. Then the real estate market, the derivatives all coupled together gave us this massive, massive down run. Okay, that was yesteryear. That was yesteryear. We are in a new year right now. We are in this year. Completely different. Watch this. And yes, Mark B, I will answer that question for you in just a moment. Here's where we are now. Crude breaks over 100 right about here. So yeah, we start to feel it right away. This blue line is not support or resistance. It simply shows you that we V-bottomed a long time ago. It's just an old line. So I'll move it out of the way. Crude hits 100, we go here. I say this is what likely comes our way. We backpedal to about here. We hit this staging area and we take off. And why? Look at this staging area a little more closely. Watch when I snap a line here. This should be our staging area for these reasons. Support or resistance, depends upon where you are in the market, but respect being paid to the line all the way across it, everywhere you look. Lots of respect to this line being paid, and then when it finally breaks, look at the massive break that takes place. When it can't hold the line anymore, boom, massive break. When it gets above the line, like here, boom, nice fat rally. So I think we pull back, and you guys heard me say this level to you before. We get anywhere near 1200, Oscar says buy everything. Buy it and take it home with you. You get near 1200, get yourself long. There is a stopgap. Your stopgap is likely here where you buy more. You get below that, and then we have to have another discussion. For now, this will be our staging area. This is where I am starting to plan on getting us long, right in that zone. Now, remember, things change rapidly, and as we get closer, volatility, velocity, and other markets could make me change my mind. For now, the analysis sets up so that this is our targeted area to hopefully build a long position to ride them back to 1650 all the way up for the rest of the year. That's what I'm seeing now, traders. That's what I think we need to pay attention to. Remember these pictures. And we are going back to a daily. Remember that we are now looking at unequivocally bear flags breaking down. Nothing else that you can call this right now until it shows us it's something different, except for that it is a bear flag. Okay, if it morphs into a bull flag, we will call it when it does. Until it does, this, my friends, is a bear flag. It has a projection and it's going down. We will go down for the next few days. We are absolutely selling rallies for the next few days. Unequivocally, this is scary if you ask me, and this is the ESM 11 daily bar. Traders, pull your own charts, do your own homework, compare this class to what you see in your own charts, and thank you so much for coming to today's class. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.